On April 8, 2026, reports of a two-week U.S. Iran ceasefire triggered a relief rally across the markets. 42 Macro and Nana report that the agreement centers on a commitment to reopen the Strait of Hormuz, removing a critical energy supply tail risk and serving as the day's primary de-escalation catalyst. The geopolitical shift has triggered a broad market recovery. Sunny reports that the S&P 500 completed a massive V-shaped reversal, climbing more than 2.5% to erase its recent losses. This coincides with reports from Joseph Carlson that the Strait of Hormuz is officially open for commercial traffic, a development that removes a primary tail risk for global energy. Beyond the initial price relief, 42 Macro observes that reopening the Strait of Hormuz is catalyzing a broader ROR phase transition. As commodity shipping resumes, analysts expect dollar recycling flows to normalize. This transition helps dissipate global liquidity pressures, moving the backdrop toward a more structural risk-on environment. While markets are enjoying a relief rally, the Fed's internal stance is creating a significant point of friction. Nana reports that the newly released FOMC minutes show a hawkish shift, with more officials contemplating rate hikes due to stalling inflation progress. Danielle DiMartino Booth notes that this internal stance persists even as broader economic surveys weaken. Danielle DiMartino Booth observes that this policy remains firm even as economic surveys show signs of weakness. Meanwhile, Sven Carlin points out that the Fed fund rate is still holding at 3.5%. Sven Carlin points out that this 3.5% rate is nearly double the 2% level originally expected for the year. This sustained higher-for-longer reality is what analysts say creates a major complication for the growth outlook. The AI sector is tracking a major technical shift at Anthropic, with the announcement of its new model, Claude Mythos. Unrivaled Investing reports that Mythos is capable of autonomous zero-day exploit discovery across major operating systems and browsers. This technical update coincides with a significant move in the company's financials. Anthropic's revenue run rate reportedly climbed from $9 billion at the end of last year to $30 billion by April. For public market investors, Alphabet provides a key link to this growth, as it holds an estimated 14% stake in the private AI leader. While the revenue surge highlights rapid enterprise adoption, the autonomous exploit capabilities introduce a new layer of complexity for the cybersecurity landscape. Even as tech recovers, risks within the AI sector are turning more idiosyncratic. Joseph Carlson highlights a New Yorker profile alleging a history of deceptive behavior and governance issues at OpenAI, which may pressure future valuation. This coincides with a broader shift toward ROI scrutiny. Sven Carlin notes that hyperscalers have seen recent 15% pullbacks as the market questions the actual return on these massive capital expenditures. In contrast to those corporate hurdles, specific technical recovery plays are beginning to surface. Sunny identifies the storage chip group, including Micron and Western Digital, as a preferred destination for capital as the broader semiconductor landscape stabilizes. Beyond the immediate relief rally, broader macro signals suggest a significant regime shift is underway. The compound highlights that value stocks outperformed growth by nearly 12% in the first quarter, marking the widest spread since the dot-com era. On the fiscal front, Sven Carlin reports that U.S. federal interest spending has topped $1 trillion, a threshold that likely constrains future policy flexibility. 42 Macro also points to trade policy being used as fresh leverage, with proposed 50% tariffs on nations supplying weapons to Iran. These moves appear aimed at strengthening the U.S. position ahead of major global trade discussions scheduled for May. While the market cheers the geopolitical relief, the underlying labor data provides a sobering reality check. Danielle DiMartino Booth points out that the ISM Services Employment Index has tumbled to 45. This is a recessionary level not seen since the 2008 financial crisis, signaling a sharp contraction that is now beginning to show up in other mobility metrics as well. Beyond that hiring slump, the labor quits rate has fallen to 1.9%. This suggests workers are staying put as economic anxiety rises. In response, the Watchlist highlights storage chips for technical strength, alongside utilities for defense, and semiconductor recovery plays like ASML. We're entering a fragile two-week window where this de-escalation will be tested daily. Sunny reports that ceasefire violations are already surfacing, which may heighten volatility before Friday's critical inflation update. Beyond the headlines, we'll be monitoring shipping volumes in the Strait of Hormuz for signs of sustained normalization. For full source details and claim links, please see the video description.